Baby, it's the real estate therapist. I be working super hard and so do y'all with this. So come on down and let me show you how to buy yourself a real and nice fancy house.
Hi, my first time home buyers. I have got a game plan for you today. I have 10 essential steps to help you purchase your first home, okay? I am Sharita Holmes. This is the Real Estate Therapist channel, your go-to place for all things real estate, all things Arizona. If you are ready to dive into the exciting world of homeownership, this video is for you. Hit the like button, please subscribe, and let's get ready. So if you have a pen and paper to write down these steps, take notes, bullet points of different things that stand out to you, you can write them in the comments, any questions that you might have, okay? So the first step we want to get started is working on your finances. You want to assess your finances, want to make sure that you are financially ready in order to embark on such a big purchase in your life, but rewarding. I love working with first-time home buyers, so I'm excited to get these steps to you. Okay, so as I stated, we want to talk about assessing your finances. If you have a budget, you want your savings, any reserves that you may have, you want to write things out and budget everything out so you are prepared in this process. Okay, now with assessing your finances, we want to start with the type of employee that you are. Are you self-employed or are you a W-2 employee? So let's talk about W-2 employees. Some W-2 employees, they're broken down into like hourly or salary. So with hourly employees, you want to make sure that you are very consistent with your hours. Okay, the lender is not want to see your hours fluctuating every week and you kind of just don't have a structure or a set amount of hours for them to work with. Okay, so let's give an example. If you are a full-time employee, that's usually about 40 hours per week. So 40 hours per week, that sets you as full-time. The underwriter is going to want to see that you are consistently working 40 hours per week. They don't want to see anything less 1 week and then you have the 40 hours the next and just kind of fluctuating up and down. So I have an experience that I can give with that. I had a client who one of the work weeks she clocked in for like 38.5 hours. And the underwriter kicked it back to us because on your application, when you state you're full-time and you work 40 hours per week, that is what the lender is going to want to see. That's what helps them determine what you are able to afford monthly, okay? And another way you can look at it with salary or with your income period is if 30% of your income can cover your monthly mortgage payment, okay? So you want to calculate that and make sure that lines up. Now, as I stated, another type of employment is self-employed. So if you are a 1099 or a self-employed, contracted individual, then you just want to be prepared for a few things, okay? You want to be prepared to have your business tax statements. You want to turn those into the lender. You also want to turn in your year-to-date profit and loss statement. Also, your most recent business bank statements, okay? So those are very important documentation that you want to have and be able to give over to the lender. And if you are planning to purchase, so let's say you're self-employed right now as myself and tax season is coming up, we're preparing for taxes, getting everything together, and I want to purchase a home. So what I would suggest is you right now talk to your mortgage lender and your tax preparer together to let them know your goals, that you are preparing to purchase your first home. You want to make sure that you are filing your taxes correctly so that it is beneficial to you. You want to just remove any potential problems that you might have when filing your taxes. There's some self-employed individuals that will sometimes like write off everything and then it shows that you didn't make any money for the year or you're even in the negative. So you want to make sure that you are consulting both of those professionals in order to, get the best out of what you can. Okay. So, and there are other types of income as well. So we have SSI, that's a form of income, that's verifiable income that the lender could use. You want to make sure that you have your award letter. You have your SSI award letter. So having your documents to verify everything is very important in this process. Another form of income that some might not know about is child support. You are able to use child support as your income. It just has to be court ordered. Okay. I know some parents, you guys have an agreement amongst yourself, and even the income has been coming in consistently year after year, but the lender will still only want to use the child support if it is court ordered. Okay. And when I'm giving these tips and insights, I am speaking on traditional lending. There's other type of lenders out there. There's private lenders, there's hard money, there's all different types that might have different set of rules and guidelines. But what I'm speaking on is traditional lendings. These are the typical rules for a traditional lender. Okay. Now that we have talked about the type of income that's coming in, and type of employee that you are, what else matters is work history. Work history is important as well. So typically lenders, they are going to want to see about 2 years of work history. Okay. So any gaps or career change, it might call for a letter of explanation from yourself. So you would just explain in a letter why you have these gaps. If there's a lot of career changes, a lot of different job changes, you're going to want to explain that as well. Also, if you have multiple jobs, if you have 2 jobs, they both need at least 2-year work history. That is important to note because I've experienced with first-time home buyers who, if they get their pre-qual and they're not too excited about the amount that they were approved for, and they want more purchase power, so they'll say, well, I can just get a second job and add that onto the income. And unfortunately, you wouldn't be able to do so because that second job would need to have at least 2 years of work history. Okay. And again, I know this is for traditional lending. Okay. Now, there are some one-off situations where you might have a client that says, well, I'm from another country, and in my previous country, I do have over 2 years of work history, and I've only been here in the States for 1 year. Are you able to assist me? And the answer to that is yes. I have lenders that are able to verify your previous work history as long as it's verifiable in your previous country. They can verify the income there and plus take the year here that you've worked as well. Okay. I'll give another example, a recent college student. So let's say, you've recently graduated and you've only been in the workforce for a year. Now you are able to, the lender is able to, you get your transcripts, your diploma, make sure everything checks out, and they can use your college time. Okay. So they can use a year of your college time and also the year that you've been in the work history in order to get you approved. So recent college graduates, don't be discouraged on that. You are able to purchase a home even if you only have a year of work history, because the lender can and will be more than happy to use your college time as well to get you approved. Okay, so now that we've talked about the type of employment, work history, all that ties into your affordability. Okay, so affordability is the name of the game. The lender wants to make sure that you're able to afford what you're asking for, what they're willing to lend out to you. So what comes into play is your debt to income ratio. So you might hear from your lender or your real estate agent your DTI. Okay, so depending on the lender and depending on the program, your DTI needs to be less than 50% or less than 40% or less than 30%. Like I said, it depends on the lender and the program. So you are able to calculate your DTI by taking your monthly debt and divide it by your gross income. Okay. So once you divide that by your gross monthly income, it's going to get you a decimal. So you need to multiply it by 100 to get a percentage. That way you see your percentage, you see where you fall in line, and you'll kind of know where maybe you need to cut back on some of the expenses that you have, okay? Another important thing is to have a savings and a couple of months of reserves. Now, there are down payment assistance programs and there are, zero down programs, but you still want to have a savings. You still want to have a couple of months of reserves, meaning a couple of months of your mortgage payments saved and reserved in your account for rainy days. The lender does want to see that. They want to see some reserves. So let's say you don't have a down payment assistance. You're going to be paying your down payment. On average, you need to have saved around 6 to 6.5% of your purchase price. Okay, so that can cover your down payment and closing costs if needed. And you also want to take in consideration and keep in mind that you do have some upfront costs in this. Okay, one of them is your earnest deposit. Another one is your inspections, because you can have multiple inspections that needs to be done on your home. And some lenders do require you to pay your appraisal upfront as well. It just depends on the lender. Okay. With your earnest money, that's usually $1,000 or 1% of the purchase price. That really just depends on the market. And I'll get more in depth into that later on in the video. So the inspections, those also depend on the size of your home, the type of inspections that you have. So that can start around $250 and up. And again, it depends on the type of inspections. There's different type of inspections that's needed. General inspections, you have roof inspections, plumbing, pests, if there's a pool, just all different types of inspections that the home might need. Okay, so down payments are usually 3% plus of the purchase price. I know that you hear 20% is needed to purchase a home for a down payment, but that's just simply not true at all. Okay. The closing costs can range from 3% even up to 6% of the purchase price. Your closing costs, they include fees such as your appraisal fees, your prepaids, your title fees, your lender fees. You will receive a detailed sheet from your lender of what fees are included in your closing costs. So just keep in mind to have about 6 to 6.5% saved. And if you are, and there are a lot of first-time homebuyer programs that are great where you don't have to bring in any for your down payment. So you might not even use all your savings. It's just good to have a cushion, okay? Now, step number 2 is your credit. You want to check your credit. You want to see where you stand credit-wise, okay? This is the most asked question that I get. Is, do I have to have good credit? What does my credit score need to be? And let's just kind of define what good credit means in the mortgage world, okay? So good credit, it means that you've been paying your bills on time, you keep your credit card balances under 30% of the limit, and you don't have any judgments, liens, or outstanding collections within the past 24 months. Okay. Now, if these are challenges for you, if you need help working on these things, there's a lot of lenders out there that provides a credit specialist, someone to work with you, kind of give you a timeline, and go over your credit report on you and to let you know the things that you need to do. There are individual credit repair specialists out there as well. Some charge a fee and some are free. So as your real estate agent, I will be recommending all resources to you, and then just so you can do your own research and kind of find the best fit for you, okay? Now, so the other question, like I said, is what score do I need? My rule of thumb is to have a minimum of a 640 FICO score, okay? You can check your FICO score at myfico.com, not Credit Karma. Credit Karma can be like 100 points off. So myfico.com is a more accurate, close to what the mortgage lender will see. And how it works is the lender, they will take your 3 scores and use the median. So the middle score between the highest and lowest, and that's how they would determine what your score is for this loan. So there are now, I know you don't have a 640. There are programs out there that can get you approved with in the mid 500s, going up. But I want you to keep in mind that your credit score does affect your interest rate, okay? So I want you to think that the lower your score, the higher your interest rate, and vice versa. So if you are in the mid 5s, you do have some time to kind of work on your credit score, get it up, so you are in a better position to get a better interest rate, okay? And now there's a but, or there's an asterisk to everything that I'm saying, because there are lenders out there that are providing portfolio loans, which is like an in-house loan. It is an in-house loan, and it gives the lender a little more flexibility. So their in-house loan might have a program where they require like a minimum credit score of 620 or 600, and and it provides you with the different incentives. Their credit score might not be based off of their interest rate might not be based off of your credit score. So if their minimum is 620, you meet that minimum, and there's someone who has a 720, of course that's meeting the minimum, and you guys might still have the same interest rate because of this in-house loan, okay? And there are loans out there like that as well. So if you need assistance with your credit, if you right now, while you're watching this, you know that your credit is in a position that it needs help, write it in the comments below, credit, and I can send out the different credit specialists that I have that'll assist you in getting you on the right track, okay? So that was step number 2. We are now at step number 3, okay? The first one I said is the most important. This one is the most important as well. This step is a game changer. This is finding your real estate agent, okay? It is so very important to work with a real estate agent on such a big purchase. This is a big purchase. So you want to work with a professional, someone that can assist you, okay? Your real estate agent is your secret weapon. So there's insights that we know, just knowing the market, different things that you might not understand, that can help you win and come out on top, okay? So you do want to interview different real estate agents. You want to vet them, okay? Because these agents, we're here to help you navigate the market, negotiate deals, and provide valuable insights. Okay, so I say vet and interview. So you would treat it just like if you think of when you applied for a job in an interview or interviewed you and asked you different questions. You want to do the same with different real estate agents, okay? So you want to ask them questions, make sure that they're aware of the market. Do they know the area? And if they even work with first-time home buyers. There's some realtors that don't work with first-time home buyers or don't know the different programs out there and understand how to maximize you being a first-time home buyer and getting the best deals. Also, what's very, very important is, are you compatible? Do you guys like each other? Do you like their personality, their approach? Are you comfortable with them while you're interviewing? Do you guys, are you guys getting along? That is very important. So let's say everything checks out. Now you want to hire them, and you want to treat this hiring process just like out there when an employer hires you. There's paperwork involved. So with realtors, there's a hiring sheet that is called the buyer broker agreement, okay? So this is your employment agreement that is between you and your buyer's agent. On that agreement, it'll go over retainer fees if they charge one, the due diligence they have to you. There's an expiration date on there as well, compensation, okay? So with compensation, that's a big one. That's the most curious, is how's a realtor paid, etc. So realtors are generally compensated 3% of the purchase price. Everything is negotiable. They can, require more, or sometimes they would get less than the 3%. But the big question is, who pays the buyer's agent? Is it the seller? And the answer to that is no. The seller does not pay your agent. Okay. So the seller pays their listing agent, the agent that listed their home, an agreed upon amount percentage that they came up, with each other. And then it's up to the listing agent. They have the choice if they want to split that commission, that agreement, with the buyer's agent for bringing a buyer to their deal. Okay. So on this form where it says compensation, let's say your buyer's agent say that their compensation requirement is 3%, the average. And let's say that the seller does put in the agreement that they are going to split their commission and they're going to give 3% to the buyer's agent and keep the 3% for themselves. Okay. Then fine, the buyer's agent is paid. Then, you move on. You don't have to worry about that. But if let's say the seller's agent said, I will split, but I'm going to give you 2.5% or nothing or 1%, then that we have to make up to get to the 3%. So you and your agent will need to determine before you start getting and negotiating how they will be paid if they're not paid their full amount that they're requesting. Okay. So if they're not paid the full amount, then it would be on you to pay whatever agreement that you guys have, and that will be paid at closing. So that would be part of your closing costs. So that's how your closing costs can be either 3% of the 3% all the way up to 6%, because you might have to pay your agent. Now, closing costs. We know that a seller, you can ask for seller's concessions to cover your closing cost. So if you ask for seller's concession, let's say you ask for 6% seller's concession, that covers all your fees plus your agent's 3% that they ask for. Okay, so that's a way that can be paid at closing as well. It's done all the time. Okay. Another question that is asked is, can your agent represent both parties, the seller and the buyer? Yes, this can happen. This is called a dual agency, dual representation. Is it done a lot? No. There's some brokerages that won't even allow it. Okay. Personally, myself, I like to work with one or the other because I want to give my due diligence, my all to to my client, and that's hard to do when you're working with both. Okay. So you want to that is possible, but then it would be up to you if if you're okay with your agent working with both. This is stuff that you can express. Okay, know that you ask as many questions as you want, and you can express and say, I will only be comfortable if you're representing me because I want to make sure that I'm getting the best deal, and whatever your concerns are. Okay. So make sure that you collaborate with a real estate agent that works hard, whether they're new in the game or experienced. Okay. It really actually doesn't matter. A new agent can do the same for you because they're going to use their resources. They're going to team up with their broker, someone who's experienced, and be able to assist you in this as well. Okay. You just want to kind of pick up on their spirit, their personality, and make sure that they're on your team. Okay, so step 4 is getting your pre-approval. Okay, you're with your real estate agent by your side. You're gonna get your pre-approval for your mortgage. Your agent is going to recommend you a number of different lenders after assessing kind of your situation. You want to get the different lenders, and you will interview these lenders as well, like you interviewed your real estate agent, okay? You'll consult with them. They'll let you know your buying capacity, the different programs that they have for you as a first-time home buyer. Like I said, that you ask a lot of questions to your agents. Make sure you ask a lot of questions with your lender as well, okay? So I have a worksheet that I'm going to link to this with different questions that you can ask your lender regarding programs, fees, the amount of time it takes to close on a home, just different questions that you might not think of, okay? So this step in getting your pre-approval, it determines your max price point, okay? AKA how much purchase power that you have. This is needed to start making an offer. So there are different type of loan types that you could be approved for. USDA, that's zero down. That's in rural areas, you can use that loan type. VA, that's for our vets, zero down. There's FHA, that's 3.5% down. And conventional loans, that can be 3% plus, okay? So as I stated, not 20%, right? But you can put 20% down if you like. And if you did put 20% down, you can avoid PMI, which is the private mortgage insurance, okay? This is paid to the lender in a chance that you default on the loan. So it's an extra amount that's added on to your mortgage. Now, I do have lenders that has programs where there is no PMI, okay? They've paid for the PMI, so that saves you a couple of $100 on your monthly mortgage, which gives you more purchasing power. So there are programs out there where your PMI is taken care of, and you still don't, if you don't want a PMI, you're not having to come up with 20%, okay? This is very important. Now, just because the lender says you can afford a certain amount, that does not mean you should max out, you guys, because only you know your spending habits, only you know your budget. You know the things that are not included in your DTI, in your debt that is recorded on your credit report, such as if you every 2 weeks get your hair, your nails done, you like to take vacations at this many a time. You want to calculate all your expenses that you are doing prior to this and make sure that that matches the amount that you are going for, okay? So remember, you know your spending habits, you know what you like to do with your money. So don't max out if it's not necessary and if you can't afford it. I don't want you purchasing a home to become a burden on you. So it's very important for me that this process, as I said, is smooth, and I'm very honest and upfront about these things, okay? Now, step number 5. You want to define your priorities, okay? So now that your budget is in place, it's time to define your priorities, what your must-haves, what are your deal breakers, okay? And you want to be realistic about these things as well. Like I said, you want to consider your budget, have your budget in thought when you are defining your priorities. So you want to consider location, you want to consider size, amenities, your future needs, such as like schooling, if you plan on a future family, if you don't have kids, are you going to have kids in the future? So a school district, might be important for you. So this will guide you in your house hunting journey, okay? So that's very important to think of your priorities, where you're at and where you want to be. Because your first home could just be, your first home doesn't have to be your forever home. It's just your first home, getting a purchase under your belt to help you walk you through that I've purchased this home. Now, if you're, a couple years or whatever down the line, if you want to sell it or if you want to keep it and become a landlord and then purchase a home, it's kind of like a rinse and repeat cycle until you get into your forever home, okay? Now, this step is the most exciting step. Step number 6, it's the fun part. You are starting to house hunt. You have everything in mind from steps 1 to 5, and we are going house hunting. So you're attending open houses, but you are working very closely with your real estate agent in doing so, okay? So they're attending the open houses with you. You guys are exploring online listings. This is very important to know. If you are considering a new build, or even if you're not considering a new build and you happen to drive past a new build, call your agent immediately, because your agent has to be there on your first visit, okay? Now, your visits after that, that's fine, but your first visit, your agent has to be there to register you. If not, the builder won't allow, now there's some that might, but majority builders won't allow you to use your real estate agent, your representation, okay? And this is very important because the salesperson that you come in, you speak with, the inspector, the appraiser, if you're going to use their lender for the different incentives that they have, they all work for that builder. So you don't have anyone in that situation that works for you. And so you want to make sure that you have your advocate on your side. You want to make sure that your agent is there and present to go over things with you, like the contract, because the builder writes up the contract in new build situation. On resale, you yourself and your real estate agent, you guys write up the contract, okay? So you want to make sure that there's someone there that can read the contract with you and help you understand how everything works, okay? So the more informed and selective you are, the better your chances of you finding the home that is just right for you. Okay? So now we are moving on to step number 7. Step number 7 is we are making an offer. So you have found the home, we went hunting, and you have found the home that is perfect, it's just right for you, and you want to make an offer on this home. You're going to work with your real estate agent to submit a compelling offer and to navigate negotiations with the seller. Okay, so it is very important and a crucial step in getting the best deal that works for you. And this is why I said why I don't like to represent both parties, because I would want to get the best for my seller and the best for my buyer. And yeah, so with making this offer, this is where you will complete the contract. You will go over everything. You will write in, your different wants in the homes. You're presenting this to the seller, okay? You're going to receive other important documents during this process as well. One of them we call a SPUD. So this is a disclosure, the seller disclosure to go over a house. I call it a house fax, like the Carfax. So the seller, they're telling everything that they know about the house. It has questions on this document, this packet already. And then they're filling in the questions the best of their knowledge, truthfully, okay? And everything I'm speaking on is Arizona real estate related. Different states calls for different things, okay? But I'm speaking on Arizona real estate. Now, also on this offer is where you will be writing in that earnest deposit that we spoke of earlier. Remember I said these are 1,000 or 1% depending on the market. What I meant was, let's say we were back in the market where the pandemic, where there was a lot of competition, okay? You were having to bid and bid and bid. So if you wanted your offer to look most compelling and most attractive, you're offering more of an earnest deposit to let them know I'm serious about this and I want you to take my offer into consideration, okay? Another important thing on this contract is your due diligence period, your inspection period. Now for Arizona contracts, 10 days are pre-written in, but let's say we are back in that pandemic market. Some were offering less than the 10 days, that I can get the inspection done and everything that I need to do less than 10 days. But this is something you're going to go over with your agent and you're making these decisions. Your agent is writing it in and giving their advice and giving you what's going on in the market so you can make the best, most educated advice. There's another worksheet during this process that is called the buyer advisory, okay? This is very important for you to look over as well. This document is made just for you, the buyer, to protect you in this. So you can go over different things that you might not know of, okay? So during your due diligence period, or you might hear inspection period, this is the time that you get your inspection done. So once, let's say that contract has been accepted, you want to get your first inspection done within the first couple of days, just in case that general inspector says, I see something up with the roof, get a roof inspector out here. Or I see something with the plumbing, you might need a plumbing inspector out here. So there's different inspectors that can come out, okay? And also you want to look over that buyer advisory, and it's going to let you know different things that you need to do during this time as well in that due diligence period, okay? Another thing is you want to get your insurance during your due diligence period. So you want to make sure that the house can be insured, okay? So your earnest deposit that you gave is being held by the title company. Again, this is Arizona real estate. So in Arizona, our title companies hold the earnest deposit, not your real estate agent, not the seller or the seller's real estate agent, okay? This is done by the escrow company, okay? And then, so during your due diligence period, which brings us into step number 8. Step number 8 is home inspection and appraisal. So this is your due diligence period. You're wanting to get your different inspections done, and you want to take the steps to make sure that the house is in a condition that you're able to close on and live with, okay? So you want to identify any potential issues with the property that you want to bring forward. So once you have your inspections done, you're going to write it down on what we call a Benzer, okay? We're going to write everything down that you would like for the seller to do. Now, this does not include cosmetics. So if this is like a scratch or a little paint chip or anything cosmetic is not what you would include on your Benzer, okay? So like I said, I mentioned the roof earlier. So if the inspector seeing something with the roof and then we call in a roof inspector and they're like, yeah, we need to replace this roof, that is something definitely you're going to put on your Benzer. And plumbing, you're going to put that on your Benzer. Electric, different things like that. So now that we have put that on the Benzer, it has to be turned in within the due diligence period that was selected. You turn it into the seller. They now have 5 days to respond to that paperwork, okay? Simultaneously, the lender will conduct an appraisal. So they'll kind of follow up with you to see, like, how did your inspection go? Does it look like this is a go? So we can go ahead and get the appraisal done, okay? So they want to, because the lender want to conduct an appraisal to ensure the home's value matches the loan. The seller can come back with the Benzer by saying they're going to fix everything, or they're going to give you a credit that goes towards your closing. Or they can say, we're not fixing nothing. Or they can say, these are the list of items that we are going to do. And then it will be up to you if you want to move forward with the closing of the home or if not. If they don't come in and let's say they're like, no, we're not going to fix any of these things, or we're going to fix these few items, and you just find it not financially feasible for you to fix the stuff or for you to move forward, you are able to say, okay, I don't want to move forward on this closing, and the title company will then return your earnest deposit to you. Okay. Now, while that's going on, step number 9, all through the process, securing the financing. Okay. So the mortgage company is finalizing your application, and you are working closely with your lender to ensure everything is in order. You're making sure that you are working those hours, those 40 hours per week, that they're not fluctuating. You are making sure that you are making no changes, no big changes in your life. What I would like for you to do during the closing process is just to put your life on pause. Just hit pause. Okay. So you're not making any big purchases. You're not using your credit. You're not opening new credit. You're not quitting your job. Please don't quit your job. Please don't quit your job. Please don't purchase a new car. Don't open a furniture store credit card and go crazy and max out during this closing. Now, once you close and your keys are in hand, what you do is your business, okay? Now, so that brings us into step number 10, the closing process and move in. Okay, so yes, we are at step number 10. You're going to review the necessary documents. Now, 3 days before the closing, you have received what is called the closing disclosure from the lender. That's going over all those fees, that's going over your credits and your debits, everything monetary in this process, okay? So at the closing table, you're here to sign your documents, pay your closing costs, okay? And then become a homeowner. Now in Arizona, you're not able to get your actual keys until it is recorded with the state that you are the new homeowner of this property. So let's say you go in and you do the closing, you sign everything, you give your closing costs money. Then we wait, not at the title company. You go home, go about your business, get your moving truck, get everything what else you're in order, and then we'll receive an email from the title company that says, congratulations, you have now recorded. Now you can get your keys and you are officially a homeowner, and we are celebrating this exciting milestone with you, okay? So those are the 10 steps in purchasing a home as a first-time home buyer. If you have any questions, if you have your own experience in purchasing a home, please write them in the comments below. I appreciate your support as I support you. You have listened to this full video and conquered the 10 essential steps to purchasing your first home. So if you did find this video helpful, give it a thumbs up and share with everyone that you know, even those who are not first home buyers. So I am excited, and congratulations that you've even taken the first step in wanting to own a home, okay? Don't forget to subscribe for more real estate tips and insights. Until next time, happy house hunting. This is the Real Estate Therapist.